From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Monday. I'm Andrew Gagan. Great to have you with us here at Ausbiz as we wrap up this Monday. First trading day of the week has been a positive one. Let's take a look, see where we're at as we settle on the market, showing we're up 0.25% on the Sigma 200. Just making a bit of a comeback, in fact, over the past hour. And, well, I'll tell you what it's all about today. Let's get to our three themes. A2, its outlook having soured off the back of its results this morning. The banks are holding strong. Westpac among those also reporting, which was well received by the market. And the goldies are glowing. That's after the gold price hit another record high, crossing that psychological barrier of $2,500 an ounce. So let's take a look at the sectors, see those that will have won and lost in today's trade, beginning with the utilities. That was the best performing sector, in fact, led by Origin and AGL. Meanwhile, the consumer staples, they also did well there. Actually, I lie, they didn't do well. It looks as though they did well, but they didn't because of that one at the bottom. A2 Milk, in fact, it made it the worst performing sector because of that result from A2 Milk. All about what's to come with a particular view on China. We have seen the Chinese birth rate is falling, and that's likely to impact A2 Milk as the company recognises the challenges it has in its largest market. The banks, as I mentioned, they're led by Westpac off the back of its results today. And gold, aside from Regis, all doing very well today, led by Evolution. They're up more than 3.5%. All right, so Westpac did rally after it posted $1.8 billion unaudited net profit for the 3 months to the end of June, up 6% on its average quarterly return in the half. Suncorp rising after its full year net profit jumped 12% from a year ago to $1.2 billion thanks to higher insurance premiums. Property giant Lendlease lowering its share price falling after reporting a loss of $1.5 billion from $232 million the previous year. It'll pay a final dividend of 9.5 cents a share. BlueScope falling after FY24 sales revenue dropped 6% to $17 billion on lower steel prices. Underlying net profit there down 22%. And financial software provider Iris, it also ended mildly negative there after announcing that it would reinstate dividends following a 52% surge in earnings for the half year to $67 million. All right, well, lots to consider on the earnings front locally, of course, and also we're taking a close eye on what's going on at a macro level too, with the all-important Jackson Hole meeting to take place later this week. Let's bring in Josh Gilbert from eToro. Josh, a very good Monday to you. Great to catch up with you again. Let's start with what we're seeing locally, all about those profits, of course. What have you made? Because we're about halfway through earnings season, I guess. What's your takeout?
Yeah, good afternoon, Andrew. Good to be here. Good to chat again. Look, I think so far so good from reporting season. I think the market will tell us that. We've had 7 straight days of gains, which is coming off the back of probably half decent reports. Obviously, you sort of alluded to that A2 Milk miss there, and I think that's probably quite a key one. If you're sort of not hitting the mark, you are sort of going to be punished. But then if you are delivering on what is pretty lofty expectations, you're going to be rewarded at the same time. The two names standing out today, Audinate at the top of the ASX and then A2 Milk at the bottom. And then obviously we've got the sort of the banks delivering CBA last week, Westpac coming in with good numbers today, and we obviously know how much weight these financial names have on the index. So yeah, look, so far so good. No real, I would say, mega caps other than that Westpac update today really for the rest of the week. A few tech names to sort of come through, but we'll probably look to sort of next week when we have a few bigger names coming through as well. We'll probably see a bit more volatility from the market from those results. No real market movers today, I would say, and probably for the rest of the week either. But yeah, so far so good. And we had some sort of better data as well out of the US last week, which kind of shifted those recession fears a little bit. So it's been, yeah, a positive sort of 7 to 10 days, and that's reflected in market movements.
Josh, I reckon you're feeling fairly bullish at the moment. The reason I say that, because I don't know whether you can catch your own image there. You are wearing the eToro crown at the moment. You look acting and looking like a bull right now. But aside from that, Josh, I mentioned there the Jackson Hole meeting later this week. How critical is that going to be? Do you think we're going to get much out of it? Because we'll be hearing from Jerome Powell. This, of course, comes ahead of that much anticipated Fed meeting next month, the debate being whether they're going to go 25 or 50.
Well, I think that's exactly it. I think it's the question now of, we know that this cut is coming. It's just sort of really the size of the cut that we're sort of going to get. I think for me, there is a bit of a risk that we have coming in, that we've just come off the back of the S&P having the best week of the year. And this expectation that we are going to get a very dovish Jerome Powell. We are going to get an idea of him saying that a cut is coming. If we don't get that, and he is maybe, I hate to say hawkish, but if he doesn't sort of give the market what he wants, I think there is the risk there that stocks could maybe be on the back foot slightly. We have seen expectations dialed back a little bit for those rate cuts, given that some of that data has sort of eased those recession fears. As I say, we've sort of gone from almost 5 to 6 cuts by year end, by markets just sort of looking at 4 by sort of year end, and even that I think is maybe slightly optimistic. I think bottom line is that 25 basis points is all but guaranteed, without wanting to sort of say the word guaranteed. But again, it's that question mark over 25 or 50. I don't think we'll probably get 50, but it's going to be, as I say, a real look into what he can offer us. And if we have a look back at sort of previous Jackson Holes, he hasn't always sort of really given the market a lot. Last time out, back in last year, he sort of did say that rates needed to be a little bit more restrictive. The market actually fell on that. It was actually, I think it fell about 3%, the S&P 500, and then went on to fall even further after that as well. So there is the potential there that this could be high volatility, but I wouldn't expect to sort of really get anything groundbreaking from him this week. But it is still probably the key risk event for the week.
What do you make of those movements we've seen in the equity market? Certainly over the past week, we've pretty much recovered a lot of those losses. I think, like locally, we're 2% off the highs we saw previously. A similar amount, I think, with the S&P 500. Has that surprised you, that given the volatility we've had?
I just think it goes to the point of really zooming out and sort of trying to keep a level head during those turbulent times. Obviously, if we zoom back out and go to that Monday where it pretty much felt like a manic Monday, and the whole stock market was going to sort of crash, and that was it for investing ever. That was, if you looked at media and you maybe weren't sort of so in tune with markets, it was very easy to sort of think that. But I think it's goes back to this idea: if you have a long-term investing plan, stick with it. It helps you sort of really come up with or remember those good ideas that you came up with during calmer times. And I think those that consistently add to their long-term investment portfolios do tend to do well over time, and that's what the idea of zooming out and looking longer term. Selling at a period, if you would have sold on that sort of Monday, you would have missed out on the best week of the S&P 500 all year. And I think if we look back at some of those best days on the markets, they come after some of the worst days on the market. So it is about, as I say, zooming out, keeping with investing, emphasizing that sort of timing the market is harder than it really seems, and that being consistent with your investments, dollar cost averaging, spreading out your investments over time, usually tends to pay more than being emotional when investing.
I was also mentioning gold there. Obviously, gold is doing very well, as we saw the price of bullion hit that another record, that psychological barrier of 2,500 US. What do you make of those moves in gold at the moment, Josh? I guess anticipation of a rate cut, the US dollar came off, plus you've got those ongoing geopolitical concerns.
Yeah, I think it's exactly that. Those 2 points are probably the key areas. I think also, throw in there that volatility that we had as well. It's still going to sort of, I think, put a lot of investors on edge. Maybe some people thinking that we may still see some of that carry trade unwinding as well. Obviously, the idea that we've had this, the expectations of a recession heightened within recent weeks, has sort of driven investors towards gold, and obviously a weakening dollar is obviously going to be a positive there. So no surprise to see that. We've seen gold as the best performing commodity so far this year. We continue to see Central banks buying at sort of record pace as well. So yeah, not a surprise to see that. Maybe a little surprised to see that we're really not seeing gold miners keep up. I think there is a bit of a disproportion there. Again, you sort of showed it at the start that they sort of did have a pretty decent day today, but I think at some point there is a bit of a mismatch there, and I think gold miners do have a bit of catching up to do. So potentially opportunities there. But where they have struggled is obviously on that inflation front, higher costs, labour costs, interest rates, etc. So that's really dampened their sort of gains in the short term. But I think if we, again, look a little bit longer term and we can see gold staying around these levels, and those miners certainly do have some catching up to do. But as you say, that $2,500 gold price certainly represents the position that we are in, where it's going to be very interesting, last sort of few months of the year when we do have those, political elections coming up. You do have heightened geopolitical tensions, and obviously we saw some of the highest volatility that we've seen since the pandemic just a few weeks ago as well.
So I mentioned, Josh, those risk assets largely bouncing back from the extreme volatility we saw a couple of weeks ago, although crypto, perhaps not, has struggled. What's actually driving that at the moment?
Yeah, I think that was the first sort of risk asset to go, really, wasn't it? When we look back at that sell-off that we saw, when we had that, carry trade unwind, and it is the pinnacle of a risk asset. So if we're seeing, investors deleverage, and that's going to be certainly at the top of the list. And I think we haven't really seen maybe a big move back into crypto just yet in terms of the catalysts that we see have maybe faltered slightly. So we had that Ethereum launch a couple of weeks ago for those ETFs that came at probably a pretty poor time when we consider that we were sort of in a period of going a little bit risk off, so maybe that institutional appetite wasn't quite there. But we're seeing a very similar scenario to when we saw the launch of the Bitcoin ETFs. The Bitcoin ETFs launched in January of this year, but we actually didn't sort of get a new record high until the March. So it was a bit of a market sort of really waiting to see how that sort of played out. And I think we'll really begin to sort of see crypto move when we do get that first rate cut coming in. I think for me, that is going to be a signal for more capital to sort of flow back into markets, a little bit more risk on from investors. We're already starting to see VC capital returning in a pretty big way into the space. It's picked up continuously this year from the start of the year through to now as well, and that's a good sign that ultimately risk is coming back and certainly leaning towards crypto assets. So I think those rate cuts are a huge positive for us. We still don't believe that retail has come back in a big way yet, and especially when we have that sort of heightened volatility, it certainly is going to sort of maybe put investors on the back foot a little bit, especially when we do have rates still so elevated. Yes, but for me, I do think it's going to be a positive second half to the year. We maybe need that rate cut to come in to sort of really spur a little bit of buying coming through. But it has, as you say, sort of not really come back to the races as much as sort of really tech has in the same way. But as I say, we're sort of seeing a more positive end to the year for crypto than we have seen recently.
Josh, always great to get your view there from eToro. Enjoy your week.
Thanks, Andrew. Same to you. Take care.
All right, now we were mentioning there earlier, the biggest mover on the local index today was A2 Milk. That was our stock of the day. Let's hear from Zach Rios from Banyan Tree Investment Group and David Lane from Audinate.
Like A2 Milk, but when you start giving out guidance where skews become second half of the year, start of a new financial year, people tend to wait on the sidelines. So obviously what they've said is margins are going to be lower in the first half and they're going to improve in the second half. I think given the environment we're in, market is likely to take a wait and see. But overall, I mean, if you're in the stock for the last 12 months, you're still up. I think it's going to take a bit of time, but maybe still a good buying opportunity over the next 3 to 6 months, I think.
It is a growth company, and as you see from that share price, they've been priced as a growth company. The problem with today's announcement is they're not necessarily generating that long-term growth at the moment. So we have got a hold recommendation on it. The analyst's target price was $6.80. So prior to today, they were trading above their target price, but now it's significantly below that. So potentially we might see the analysts change their recommendation. But to be honest, I'd probably, there's an old adage of don't catch a falling knife, and I'd be wary of trying to buy on the dip in this case.
Right, let's check the market leaders in today's trade, see where we've finished up there. Audinate, off the back of its result, a handsome return today, up almost 20%. We did see some other movement in the tech sector. Weebit Nano bounced as well. Those goldies doing very well, as we've spoken of, with the Evolution Mining among the best there, as well as Perseus. And let's look at the laggards in today's trade. No surprise then, A2 Milk is the top of the list there, off more than 18.5%. Paladin also came off today, Ampol off the back of its result, and we see some of those other uranium stocks having fallen today. And moreover, this is some of the movement we're seeing in the small caps. Once again, some of them being in the resources sector, with a particular focus on gold. Santana Minerals up 23%. St Barbara doing very well today as well. Those that have dragged, Brockman Mining and Silver Mines coming off quite substantially, along with GreenX Metals. All right, overnight, look, fairly quiet to begin the week, it has to be said. FOMC member Christopher Waller is speaking, and we also get the US Conference Board leading index for July. Tomorrow, locally at least, we get the RBA monetary policy meeting minutes from that last meeting. We also get the China 1-year and 5-year loan prime rates. And among those companies reporting tomorrow, we do have Ansell, ARB, Baby Bunting, Helia, Hub24. In fact, we're going to be catching up with them. And Monadelphous, Reliance Worldwide, SimSmart Group, SIG Global, Tabcorp, Vicinity Centres, all issuing their earnings results. All right, so where we finished up, it's 0.25% higher for the day on the CIBO 200. So another good performance to begin the trading week. Thanks for joining us.